Welcome to the Broker Room. My name is Bob Andrusik, and today's guest is Glenn Mitchell, our Head of Commercial and Equipment Finance at Yellow Brick Road and Vow. Welcome, Glenn.
Thank you, Boban. I'm looking forward to the discussion.
Mate, absolutely. Mate, I'm reading here you've got over 30 years experience in the industry, and 9 of those years are here at Vow. Mate, you're part of the furniture. Mate, one of the things that I love about you and that intrigues me is your passion for commercial and equipment finance. Mate, tell me a little bit where this passion comes from and how did you get into commercial finance?
Yeah, Boban, it's interesting. I started my journey with the National Australia Bank and couldn't see myself being a career banker. Then joined a funds management company in the 90s that specialised in commercial lending. Had a mortgage fund. I wanted to learn more about that type of lending. Securitized markets opened for residential lending in Australia. So it was all happening, the evolution of Wizard and Aussie home loans. But I kept going back to commercial, thinking this is an area that people don't seem to be taking as much interest in. Then joined a company in the 2000s called Challenger Funds Management, had the largest mortgage trust in Australia. They had 4.5 billion. And mainly, most of that was distributed through commercial brokers. So I got to know all the aggregators in the marketplace. And then joined Plan Australia to head up their commercial and equipment finance side of the business. Did that for 5 years. A bit like a footy coach. When I came to Vow, I realised what I perhaps could have done better at Plan and absolutely loved it at Vow. We've gone through massive growth in supporting businesses in the commercial markets that are quickly growing, as we're about to talk about.
Yeah, absolutely. But one of the things that stands out for me, I mean, you're a wealth of knowledge when it comes to commercial and equipment. There's no doubt about that. But one of the things that really stands out for me that nobody probably knows about you is your charity work, all the stuff that you do offsite. Can you touch a little bit on that and also your involvement with the MFAA Council? Yeah,
thanks, Boban. It was interesting. I thought to get to know the markets a bit better, I'd get involved with the Mortgage Industry Association. Back in those days, it was the MIAA, Mortgage Industry of Australia, then changed to the Mortgage Finance Association. They had state councils. And then you'd be nominated as a president, and I was lucky enough after 12 years to be nominated as president, then sat on the board. So I really got to understand other businesses, other lenders. And then I said, a good mate of mine is Gerald Foley. Gerald owns National Mortgage Brokers. I said one day, we're running great events, most of them are sponsored. Why don't we do more for charities? And that's where we got involved in the 90s and started raising funds, which we do today through Vow and Yellow Brick Road. Very worthy charities that are out there. And I get a lot of comfort out of knowing that we're supporting other people in the markets that are less fortunate than ourselves.
Mate, absolutely. I mean, it's like I said, it's great work, mate. I admire it. And, mate, good on you, honestly.
Thank you.
Let's take it a step back. A lot of, the word commercial lending gets thrown around in the industry a fair bit, and people, some of our listeners might not know what commercial means.
Yeah.
Can you break it down for them and just let them know what is commercial lending?
It's funny. If you ask 10 different lenders, Boban, you get 10 different answers, but probably in layman's terms, it's basically funding outside of a residential property, outside the NCCP rulings. It's in a business name, might be a block of units, might be an industrial site, might be a retail. And there's lots of businesses that are needing finance in this area at the moment now. So commercial and equipment finance and cash flow lending fall under that umbrella. And certainly the banks, it's a major growth. I'll use ANZ as an example. I met with the executives yesterday. They've just put 30 staff on. The CEO of ANZ said this is an area of growth. We need to support businesses in Australia through the broker channel, which is fantastic for us, knowing that they're committed in that area.
Wow. So commercial finance, it's not just business loans, it's also car finance, it's also personal loans, it's a plethora of things, right?
Correct. Yeah. And I'll draw a comparison. 5 years ago, brokers would have had access to half the lenders in the market or funding available in the market. Today, they've got double to what they can offer. And with branch closures, more and more brokers, particularly in regional areas, are there to support local businesses, and that's needed more than ever.
It's funny you say that because it dovetails into my next point. There's a term that we throw around in the market called broker share of wallet. And it's effectively broker market share, right?
Yeah.
In terms of commercial lending. 5 years ago, I read somewhere that commercial brokers had about 15% of the market share, so to speak.
Yeah.
Now it's sitting at 40%.
Yes.
Mate, why is that? How did that happen? Where did the growth come from?
Yeah, look, it's probably a number of areas, Bob, and I'll probably break it down by three. It was more existing brokers that needed to bring new products into their bag of tricks, if you like, rather than just residential lending. People that have moved from corporate banking environments that have worked in the commercial markets, equipment finance markets. And then it's those that have upskilled themselves through the journey. So it's quite exciting, actually. You look at residential share, I think with broker share, it would be about 70% today.
Correct, yeah.
So you can see the direct comparison, the growth will continue for many years to come.
Yeah. But I've heard you say a couple of things, right? So you and I obviously sit on the group executive team at Yellow Brick Road, and we travel around together, we do PD days, etc. I've heard you say on a number of occasions that it's never been a better time to be a commercial broker and client. Why is that?
Because there's so many businesses that need support. And as I said, the branch networks across Australia, and there's not bank bashing, far from it, but they used to be there to look after the local businesses and people that were in the area, whether they ran farms or hotels or whatever the business they ran, they would have support from that local. That's no longer there. Mm-hmm. So they need to look at alternative options and what's available in the market to best suit their needs. So couldn't be a better time to borrow finance. Look, we're probably hearing a bit of doom and gloom at the moment with recent interest rate increases. It's still low in comparison to people were paying in the 90s, 20-odd% in their business funding. So it's still relatively low, and there's plenty of options available.
So what I'm hearing from you is that there's options, and like you said, it's not bank bashing at all, but I'm hearing that there are options outside the big four.
Correct.
That are available to but how does that tie back to our panel, our commercial panel at Yellow Brick Road and Vow? And, I hear things like diversification, spreading the risk. How do brokers educate themselves on the commercial lending?
Yeah, look, that's a good question, Boban, and I think that's done threefold. It's done through industry bodies such as Finance Brokers Association, the MFAA, taking a lead role to support their members, also the aggregator to support their members, and it's probably even mentoring from other brokers that are in those business units that can explain, Boban, let's say it's an area you don't play in and that's my area of expertise. Mm-hmm. For you then to leverage off me to work out how you can help your client base, and that's your critical piece, looking after your clients to make sure that they're getting every possible product that you can look after them with, not just a residential loan, look after their business loans, look after their car loans, look after their cash flow needs as time permits. With you get business flows where all of a sudden some businesses are cash flow poor, depending on what they're operating in what markets. It could be retail at Christmas time, where it's peak time where they need cash flow lending. Just leading into cash flow lending, you wouldn't have had people that you could get money from within 24 hours. Today there are plenty of cash flow lenders, fintech lenders you probably call them, which are quite unique. I would have thought 20 years ago you'd never get money within 24 hours. You'd be kidding yourselves. But let me tell you, technology has driven the markets to change.
Mate, it's funny you say that. Again, dovetails into one of my questions here. What is a fintech lender? A lot of our listeners might not know what it is or what it looks like. What is the benefit of a fintech lender to a client, but both to a broker as well?
Yeah, sure, you'll pay a premium, but basically what it is, it's been given the ability of an ABN number being plugged in, and these days you can read loan statements and tax returns quite quickly through a tax assessment notice, and they can make a decision making through a credit check within an hour, or maybe even less in some cases. It's unbelievable, and I remember having the conversation about 3 years ago, who'd want to use a fintech lender? So you really got to make sure you've got your mind open to massive changes within the markets. And again, the banks aren't in a position to be able to fund within 24 hours. They're just not capable of doing it. And if they are, it's probably a small opportunity. Yeah. Whereas these guys are there, they suit a need. And it's quite exciting, and I'm sure that'll continue to evolve in the Australian markets.
Mate, very, very exciting stuff. I know there was a lot of resistance, like you said, a few years back with fintechs, but now it's come a long way, and it seems to be adding some serious value to both brokers and to clients.
Yeah, totally agree.
One of the things I wanted to touch on that's recently happened is your article in the Australian Broker.
Yeah.
Talk to me about private lending and what are the pitfalls. What are the issues with private lending at the moment, and what are the solutions?
If there's one thing that I someone asked me what worries you in this market and talking to industry bodies. So private lending is unregulated. No one's actually regulating it as if, you know, through the banking system, products are governed and compliance is in place. At the moment, private lending, you and me could set up a private fund today and call it, we've got money to lend and do a U-Butte website. And unfortunately, there's people out there that can see that opportunity in businesses that are out there that set up as a private lender that have no intention of funding. So there are risks attached because it's been an unregulated industry. Hopefully that'll change given time, but it's our job as an aggregator, as a provider of funding, that we've got the tools for our brokers to understand the risks attached to people that are out there so they don't get caught up by these unscrupulous operators.
So one of the things that they're called shark lenders, right? Like it's called shark lending because of that. Because of that reason, right? So what should clients and brokers alike look out for? I mean, what are the telltale signs of a bad lender? Bad private lender? Look,
I had one broker one day ask me to come into the office, and he got caught up with losing up to $50,000 for his clients in funding. And I had a quick look, and I'm certainly far from a detective, but I looked at it, and the first thing that struck me was the website had a 1300 number. It had a serviced office in Queensland. I think it was Bundall from memory. Nothing against Bundall in Queensland, but there was nothing controlling this particular person. We did a bit more digging, and this person had been inside for malpractices. So there's people out there. There are people out there that will try, and it's probably like scamming at the moment, where you've got to be careful with what you give your detail or who you give your details to. It's no different in these markets. They're out there opportunistic to make money for themselves. So we always educate our brokers, and the industry do it quite often, and hopefully articles like I wrote, and that's for the benefit of the industry, not just ourselves. And we talk about this at professional development days to the brokers. Be careful who you're dealing with. You must deal with the panel of lenders that are scrutinised by our legal and compliance teams for the risk of making sure that doesn't occur. But it is an area that's open and unregulated at the moment, which the associations are certainly, the finance associations are certainly aware of.
Yeah, mate, I agree. Mate, it's a great article, and I urge everybody all of our listeners on this podcast to have a read of the article and understand really what the pitfalls are and what to look out for.
And it's not to scare people away from private lending. Far from it. There's some magnificent private lenders that can provide and assist businesses with their needs within a short-term space. So it's not to stop that occurring. It's more just to say that there are risks attached.
Perfect. Glenn, that is all we have time for today. Thank you very much for joining me, and appreciate you coming in.
Thank you. I've enjoyed it. Thanks, Boban.